Good morning, Alex and friends. I'm Grace. Today is Tuesday, September 16th, 2025, and you're listening to Alex's News. The weather in Riverside today is calling for a high of 98 degrees Fahrenheit, with a low of 71.7 degrees. It's going to be a warm one across the region, so remember to drink plenty of water and seek shade if you're spending time outdoors. On today's program, we'll be discussing the motivations behind Donald Trump's interest in reshaping the Federal Reserve, a move that could have significant economic implications. We'll also explore what Governor Newsom is set to decide concerning new scrutiny for California's FAIR Plan, a critical program for property owners. All this and more coming up on Alex's News. Stay with us. Welcome back, everyone. We begin this morning with a significant and, according to many, unprecedented effort by President Trump to reshape the leadership of the Federal Reserve. This move comes just as the central bank prepares for a crucial vote on interest rates later this week. For more on this, we turn to our senior reporter, Ethan. Ethan, it sounds like President Trump is really looking to put his stamp on the Fed. What's the latest?
That's right, Grace. It appears President Trump is making a full-court press, as NPR's Morning Edition reported earlier today, to exert greater influence over what has historically been an independent central bank. A key piece of this strategy fell into place earlier this week with the confirmation of Stephen Miran as a Federal Reserve Board governor.
Stephen Miran. That name has been in the headlines quite a bit. Tell us more about his confirmation.
Indeed, Grace. As senior reporter Jennifer Schoenberger for Yahoo Finance uncovered this morning, Miran, who is a key advisor to President Trump and currently chairs the Council of Economic Advisors, was confirmed by the Senate in a tight 48-47 vote on Monday evening. This swift confirmation happened just in time for him to cast a crucial vote at the central bank's policy meeting this week, which begins today, September 16, 2025, and concludes tomorrow. He replaces former Fed Governor Adriana Kugler, providing the president with another opportunity to influence the central bank's board.
And his appointment has raised some eyebrows, particularly because of his current role in the White House, correct?
Absolutely, Grace. This is where things get particularly interesting and concerning for some. Miran does not intend to resign from his White House position. Instead, he will take a leave of absence to serve on the Fed. This move, which Senator Elizabeth Warren of Massachusetts explicitly opposed, marks a historical first. According to Gemini Flash reporting from sources like Newsweek.com, it is the first time in the modern Federal Reserve's history that a sitting member of the executive branch would also hold a leadership role at the central bank. With Miran's appointment, President Trump now has 3 appointees on the Fed's 7-member governing board.
That certainly sounds like a significant shift in dynamics. Ethan, Miran has also proposed some pretty radical reforms to the Fed structure, hasn't he?
He has, Grace, and these are quite substantial. In an essay published last March for the Manhattan Institute, Miran advocated for significant reforms to the Fed's governance structure, as detailed by Yahoo Finance and further elaborated by Gemini Flash reporting from sources like Manhattan.Institute and Brookings.edu. His proposals include increasing the president's oversight of the Fed, shortening governors' current 14-year terms to 8-year terms, and making governors removable at the president's discretion.
Wait, 14-year terms are designed to insulate the Fed from political pressure. What's the thinking behind shortening them?
You hit the nail on the head, Grace. The 14-year staggered terms, established by the Federal Reserve Act of 1913, were indeed deliberately designed to shield governors from the immediate political whims of any single presidential administration. Miran also proposed imposing bans on the quote, revolving door between the executive branch and the Fed, prohibiting members from serving in the executive branch for 4 years after their Fed term. He even suggested nationalizing the 12 regional Federal Reserve banks and empowering state governors to select each regional Fed's board of directors, who would then select the regional Fed president. This is all to introduce monetary federalism to counterbalance increased presidential influence. Proponents argue, as cited by Gemini Flash reporting from sources like Manhattan.Institute, that the existing long-established independence is undemocratic, and that the Fed has strayed beyond its role.
So while the administration is pushing in one direction with Miran, there's also a battle on another front to remove a current governor. Tell us about that, Ethan.
That's right, Grace. Simultaneously, President Trump's administration has made an aggressive and legally contested attempt to remove Fed Governor Lisa Cook, a Joe Biden appointee whose term extends all the way to 2038, according to Yahoo Finance and Gemini Flash reporting from sources like Newsweek.com and WashingtonPost.com. Trump accused Cook of mortgage fraud, alleging she claimed 2 properties as primary residences to secure more favorable loan terms. However, new findings indicated a condo Cook purchased in June 2021 was listed as a, quote, vacation home in a loan estimate, potentially undermining Trump's fraud claims, according to Yahoo Finance.
That sounds like a contentious legal battle. What's the status of that attempt to oust her?
It is indeed, Grace, and it's a real nail-biter. Last week, U.S. District Judge Gia Cobb ruled that Cook could remain on the board, citing a lack of valid cause or respect for due process. An appeals court subsequently rejected the Trump administration's request to overturn the lower court's decision, allowing Cook to remain in her position and attend the upcoming policy meeting, as reported by Yahoo Finance and Gemini Flash reporting from sources like WashingtonPost.com and CBSNews.com. The administration is now expected to take the matter all the way to the Supreme Court.
So the fight isn't over yet. What's the legal precedent here?
The legal battle, Grace, centers on the for-cause standard for dismissing Federal Reserve governors, a protection established by the 1935 Supreme Court case, Humphrey's Executor versus United States. As reported by Gemini Flash, citing sources like Wikipedia.org, Oyez.org, and lawfaremedia.org, this precedent limits the president's power to remove officials of independent agencies to specific grounds such as inefficiency, neglect of duty, or malfeasance during their tenure. Cook's legal team argues that the alleged mortgage fraud predates her appointment and therefore does not meet that standard. They also contend that her due process rights were violated and that the fraud allegations are a, quote, thinly veiled pretext for removal due to policy disagreements. Removing her so close to a key interest rate meeting, they argue, would inject chaos into the central bank. Conversely, the Trump administration's Department of Justice argues for broad presidential discretion in defining, quote, cause, viewing, quote, contradictory statements on financial filings as sufficient grounds, and is expected to challenge the precedent of Humphrey's Executor before the Supreme Court.
All of this is happening with a critical interest rate decision looming. What can we expect from the Federal Open Market Committee meeting this week?
The backdrop for all these leadership changes, Grace, is the 2-day Federal Open Market Committee meeting, which begins today, September 16, 2025, and concludes tomorrow. At this meeting, the Fed is widely anticipated to lower its benchmark interest rate by 0.25 percentage point or 0.25%, according to Yahoo Finance and NPR. President Trump has been very vocal in calling for a, quote, jumbo cut, and it remains to be seen if Mirren will dissent in favor of a larger reduction.
And what's guiding the Fed's decision-making on rates?
Economic data, Grace. The Fed is guided by its dual mandate of maintaining stable prices and maximizing employment. August Consumer Price Index data showed core prices rose 3.1%, still above the Fed's 2% target. This prompted Senator Elizabeth Warren to question Mirren on his views regarding inflation and whether Trump administration tariffs contributed to consumer price increases. Weakening job growth has also contributed to discussions about a rate cut, according to Yahoo Finance. The outcome of this interest rate vote is particularly critical, given the ongoing political pressure.
Ethan, it sounds like a perfect storm brewing at the Federal Reserve. What's the overall takeaway here?
Grace, these combined efforts, the expedited confirmation of Stephen Mirren and the aggressive, legally challenged attempt to remove Lisa Cook, represent what Gemini Flash reporting from sources like Newsweek.com and WashingtonPost.com describes as an unprecedented assault on the Federal Reserve's independence. Critics argue that eroding the Fed's independence could lead to systemic risks, including credibility crises, destabilization of financial markets, inconsistent monetary policy signals, and a weakened ability to control inflation. This is according to Gemini Flash reporting from sources like Brookings.edu and ctpublic.org. The pursuit of these changes, therefore, marks a pivotal moment for the future autonomy of the United States Central Bank.
Ethan, thank you for breaking down such a complex and critical story for us. We appreciate your insights.
My pleasure, Grace.
Up next, we'll be looking at another major story making headlines this morning. Stay with us. Welcome back, everyone. We have our second story of the morning, and it is certainly one that hits close to home for many Californians. The state's fire insurer of last resort, the California Fair Plan, is currently facing immense scrutiny as Assembly Bill 234, aimed at significantly increasing oversight, sits on Governor Gavin Newsom's desk. For more on this, we turn to our reporter, Chloe. Chloe, what exactly is the California Fair Plan, and why is it currently under such intense pressure?
Grace, the California Fair Plan acts as a critical safety net for property owners who simply cannot secure insurance through the traditional private market. Its role has become incredibly vital because many private insurers have either pulled out of the state or severely limited coverage, especially in areas highly vulnerable to wildfires. This retreat has caused a colossal surge in policies held by the Fair Plan. As of March of this year, it had over 573,000 policies in force, which is a staggering 139% increase since September 2021. Its total exposure also ballooned to $649 billion by July 2025. It is no longer just a temporary backstop, but a primary insurer for a vast number of properties, many in high-risk zones.
That is an incredible leap in policies, Chloe. It sounds like the Fair Plan is really struggling to keep its head above water. What specific issues prompted Assembly Bill 234, especially concerning how they handle claims?
Well, Grace, a major spark for AB 234 has been the Fair Plan's controversial handling of smoke damage claims, with numerous accusations of improper denials. In June 2025, a Los Angeles County Superior Court judge actually ruled that the Fair Plan's previous policy on smoke damage, which often required, quote, permanent physical damage, quote, or, quote, perceptible by sight or smell, quote, violated the state's insurance code. According to reporting by the Los Angeles Times, the court found this standard provided less coverage than mandated by California's standard form fire insurance policy, which covers, quote, all loss by fire, without any distinction between that and smoke or smoke damage, quote. Even after this ruling, and public criticism from Governor Newsom earlier this month, the Fair Plan reportedly continued to deny claims, only revising its policy to require, quote, distinct, demonstrable, and physical alteration, quote. This new language is still facing heavy fire, leading to ongoing denials. The Department of Insurance is now actively investigating, even filing an order to show cause in July, accusing the Fair Plan of numerous consumer protection violations.
It sounds like the Fair Plan is really caught in a thick fog of controversy regarding these claims. Beyond the policy issues, is the Fair Plan financially stable enough to handle this surge in policies and the actual costs of wildfires?
Unfortunately, Grace, its financial footing is quite shaky. The Fair Plan's reserves were significantly depleted after major wildfires, particularly the January 2025 Los Angeles wildfires, which caused an estimated $4 billion in losses. To cover these costs, the Fair Plan had to issue a $1 billion assessment on its member insurance companies in April. This raised alarms because, for the first time in over 3 decades, those companies might pass these costs directly to policyholders. Through temporary surcharges, a move consumer advocacy groups are fighting tooth and nail. In fact, the Fair Plan's president warned in September 2024 that the association was, quote, one disaster away, quote, from collapse. It truly highlights the unsustainability of the current model, especially as it grapples with unprecedented wildfire risks.
That is a stark warning. So this brings us back to Assembly Bill 234. How does this bill aim to strengthen scrutiny and try to put out these financial fires, so to speak?
AB 234, authored by Assemblymember Lisa Calderon, proposes adding 2 legislative leaders to the Fair Plan's governing committee, the Speaker of the Assembly and the chairperson of the Senate Committee on Rules, or their designees. While these members would be non-voting and ex officio, proponents argue this would enhance transparency and oversight, provide improved consumer representation, and help address the broader challenges in California's insurance market. It is modeled after the California Earthquake Authority, which successfully includes state legislators on its board. Even without a vote, their presence is expected to directly influence claim handling, increase scrutiny of internal operations, and provide a platform for consumer advocacy, ensuring more consistent and fair application of policies.
It makes sense to bring more eyes to the table for oversight. Are there any other significant legislative efforts underway to stabilize California's insurance market and the FAIR Plan?
Yes, there is another key piece of legislation, Grace. Assembly Bill 226, known as the Fair Plan Sustainability Act, is also making its way through the legislature. This bill aims to provide crucial financial stability by allowing the Fair Plan to access catastrophe bonds and lines of credit, spreading costs over time and preventing those sudden insurer assessments. This is all part of a larger, quote, sustainable insurance strategy, quote, spearheaded by Insurance Commissioner Ricardo Lara, which includes other important reforms like expanding FAIR Plan coverage and streamlining the rate approval process for traditional insurers.
It sounds like a lot is on the table to ensure Californians have the coverage they need. So, what is the timeline for Governor Newsom to make his decision on AB 234?
Governor Newsom received AB 234 on September 15th, Grace. He now has until October 12, 2025, to make a decision. That means he has exactly 26 days to act. Under California law, he has three options. He can sign it into law, he can veto it, or he can allow it to become law without his signature if he takes no action within this prescribed 30-day timeframe for bills sent late in the legislative session. The future of the FAIR Plan's accountability really hangs in the balance.
It certainly does. We appreciate you breaking down what is a very complex yet critical issue for California homeowners, Chloe. Thanks for shedding some light on this today. Here are some other headlines. In Washington, FBI Director Kash Patel is preparing for a grilling on Capitol Hill. He's set to testify before the Senate Judiciary Committee today, facing a firestorm of criticism over his leadership. The main point of contention is the Bureau's handling of the assassination of conservative activist Charlie Kirk. Patel is under fire for prematurely and incorrectly announcing a suspect was in custody, only for that person to be released, while the real gunman remained at large. Lawmakers are also expected to probe allegations of politically motivated firings within the Bureau and the slow release of files related to Jeffrey Epstein. The hearing is shaping up to be a high-stakes test of Patel's ability to restore confidence in the agency. Across the pond, President Donald Trump's state visit to the United Kingdom isn't exactly getting a royal welcome from everyone. A broad coalition of protest groups is organizing large-scale demonstrations in London and Windsor, threatening to overshadow the diplomatic events. Citing what they call divisive politics and attacks on democratic norms, thousands are expected to march. It's certainly not all tea and crumpets for the former president, as authorities are launching a massive security operation in response, taking into account the heightened threat level. The visit includes a banquet with King Charles and meetings with Prime Minister Keir Starmer, but it will be set against a backdrop of vocal dissent. Moving to the Middle East, the Israeli military has launched a significant ground offensive in Gaza City, codenamed Gideon's Chariots II. Two divisions have begun moving deeper into what is considered one of the last remaining Hamas strongholds, with Israeli Defense Minister Israel Katz declaring, quote, "Gaza is burning." The offensive follows weeks of intense airstrikes and has prompted new warnings for civilians to evacuate south. However, many say they are trapped. The Palestinian Foreign Ministry has accused Israel of turning the city into a mass graveyard, with hospital sources reporting at least 20 fatalities overnight. The escalation comes as a new UN report accuses Israel of committing genocide, a charge Israel has vehemently rejected as falsehoods. In Eastern Europe, things are heating up after a Ukrainian drone strike sparked a major fire at a key Russian oil refinery in Saratov. The attack is part of Kyiv's ongoing strategy to disrupt Russia's economic lifelines and leave its war machine running on fumes. Meanwhile, tensions buzzed higher along NATO's border after Romania reported a Russian drone violated its airspace for nearly an hour. The Romanian government scrambled 2 F-16s in response, but did not fire on the unmanned aircraft. The European Union has condemned the incursion as a a reckless escalation and an unacceptable violation of a NATO member's sovereignty. And finally, it seems the clock will not run out on TikTok just yet. The United States and China have reached a framework agreement that would allow the popular social media app to continue operating in the U.S., averting a nationwide ban. The deal aims to resolve long-standing national security concerns over its Chinese parent company, ByteDance. While the final details are pending a direct phone call between President Trump and Chinese President Xi Jinping this Friday, the agreement involves transferring TikTok to U.S.-controlled ownership, with tech firm Oracle seen as a leading partner. President Trump hinted on social media that the nation's young people will be very happy with the outcome. That's all we have for now. Today's episode was made by Alexander King with Claude Sonnet 4.0, Gemini Pro 2.5, Gemini Flash 2.5, and Google Cloud Text-to-Speech. I hope you have a great day. I'll see you tomorrow, Alex.